Hello, everyone, and welcome to a short webinar on disability tax credit. We are Ask an Advocate, which is a website based project created to help clients and service providers find information and resources about income assistance, disability, tenancy, and other income supports. In this webinar, we're going to take a quick look at the disability tax credit, discussing eligibility, the application itself, and much more. Please remember that the information provided in this webinar will be applicable in Canada only. The Disability Tax Credit application form is available through Canada's federal website and is run by the Canada Revenue Agency, which we will refer to throughout the webinar simply as the CRA. For more information on the Disability Tax Credit, visit the links provided in the description below. In this webinar, we will cover a variety of topics around disability tax credit. We'll take a look at what the disability tax credit is, who is eligible, and the amounts you may receive. Additionally, we'll briefly cover the application itself and how to claim the disability amounts once approved. In our first section, we will go over what the disability tax credit is and its purpose. The disability tax credit is a non-refundable tax credit through the Canada Revenue Agency, and it aims to reduce the amount of income tax that you may have to pay when filing your tax return. This tax credit is specifically for disabled taxpayers or their supporting person. As a quick note, for the purposes of DTC, a supporting person may be your spouse, common law partner, or a dependent. You may be wondering why an additional benefit would be created for persons with disabilities. However, persons with disabilities often incur additional and unavoidable expenses that others do not. Because of this, the DTC offers relief to help mitigate some of those expenses. If you are approved for the DTC, there may be other benefits available to you, such as Registered Disability Savings Plan, Canada Workers Benefit, Child Disability Benefit, and much more. To look further into these additional benefits, visit the link provided in the description below. For the next section, we will discuss eligibility criteria, as well as maximum disability amounts you may be entitled to receive. In order to be eligible for DTC, there are several criteria that must be met. Firstly, one of the following criteria must be met. Be blind, be markedly restricted in at least one of the basic daily living activities, be significantly restricted in 2 or more basic daily living activities, or have the need for life-sustaining therapy. In addition to this, you will need to meet all of the following. You'll need to have a prolonged impairment that is expected to last at least 12 months, and your impairment must affect you either all or nearly all of the time. This typically means more than 90% of the time. On the following slide, we'll go over how the CRA defines markedly restricted, significantly restricted, and some examples of what constitutes as daily living activities. The CRA uses specific terminology when determining eligibility, as described on the previous slide. We'll go over a few of the specific terms used when determining eligibility, starting with markedly restricted. If someone is markedly restricted, they are unable or it takes them an inordinate amount of time to do one or more basic daily living activities, even with therapy and the use of devices and medication. This type of restriction must be present either all or nearly all of the time, which, as noted on the previous slide, is at least 90% of the time. Additionally, an inordinate amount of time often equates to around 3 times longer than on average. Although markedly restricted and significantly restricted are very similar, being significantly restricted would be to say that the person does not quite meet the criteria to be considered markedly restricted. It does still mean that the person's vision or ability to do a basic living activity is still greatly restricted at least 90% of the time. Lastly, some examples of basic daily living activities could include speaking, hearing, walking, eliminating such as bowel or bladder functions, feeding, dressing, as well as mental functions necessary for everyday life. The chart shown on screen is displaying the maximum claimable disability amounts from the DTC for adults and those under the age of 18. Displayed are the amounts for the last 10 years. The reason for this is if you were eligible for DTC in the last 10 years but have not yet claimed, you may be eligible to request retroactive payments by the Canada Revenue Agency. In the next section, we're going to take a brief look at the application for disability tax credit and what is required to fill it out. The DTC is a 5-page application. However, as the applicant, you only need to fill out Part A, which is exclusively page 1 of the application. The remaining 4 pages are required to be filled out by the medical practitioner, if applicable. In this brief webinar, we'll be focusing on Part A of the application, which is made up of 4 sections. Section 1 will require information such as name, SIN, address, and date of birth for the person with the disability. Section 2 only needs to be filled out if someone other than the person with the disability is claiming the amount, such as a spouse, common law partner, or dependent. The following slide, we will go over Section 3 and 4. And as displayed, you may choose to give permission in Section 3 to the CRA to adjust and backdate all applicable years, if possible. And lastly, in Section 4, your signature will authorize for your medical practitioner or practitioners to give information to the CRA and discuss information on the application. And in our final section, we will cover how to claim the disability amounts on your income tax returns after being approved for the disability tax credit. After the application has been approved, you will then be able to claim the amount when you file your tax return. One thing to note would be that the line to claim the disability amount is different depending on who is going to be the person claiming. Feel free to take a look at what line to claim the DTC on, depending on if it is being claimed by yourself, your dependent, or your spouse or common law partner. If the person was eligible for DTC for previous years but did not claim the disability amount when they sent in their tax return, they can request adjustments for up to 10 years. To do so, you will need to ask for a reassessment. We'll include a link in the description below on how to change your past returns. Before wrapping up this brief webinar, we have discovered that these are often the most asked questions we receive at Ask an Advocate regarding the DTC. If you still have additional questions, please feel free to reach out to our Ask an Advocate live chat, of which we will provide a link for in the description below. Thank you for watching, everyone. And as always, feel free to browse through our other webinars and provide us feedback by clicking on the survey link in the description.